We are ready to rock and roll. Welcome everybody. Tonight is the Viper Trading webinar. We first have to go through our disclaimer. Tonight's topic is boxing in consolidation zones and how to trade them. This is part one of a two-part series. Part two is continued on Saturday morning at 9 o'clock Pacific. We'll try to get through as much as we can tonight so that everybody has a good sense of what to do and how exactly to box these trades in to get some good movement in the markets. We're going to show lots of different charts and trades. We're running a little bit late with some technical problems, but we'll get through it. So let's get through the disclaimer. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, is to be construed as investment or trading advice. And of course, everyone in here does know that you do trade at your own sole discretion. Once again, my apologies. Let's get over to some charts and start looking at trade setups. And that's located on screen number 2. All right, this is more or less what is part of the Pro package. I'm having issues with the platinum bands tonight. They're not loading. I don't know what the problem is. But when you come into the trading room, you see the bands. So there's a series of 4 bands above and below. This is simply the trend guidance line that's part of Pro, and we're just going to have to work with that tonight. Which is okay, because for what we're looking at in terms of consolidation, it'll work just fine. Now, before we get on to actual trade setups themselves, I want to do a little quick housekeeping so that we're all on the same page in terms as to how we view markets. Just so we're all on the same page, and generally speaking, these are the rules. If the market is above the trend line, or in the case of your platinum package, that would be the midband, and heading up, so you have a series of stair steps. Background generally would be green, the bars would be blue. You have our green stealth line, that's this chunky line right here, and you're above. You're looking for long trades only. If you are below, let me see if I can find a downtrend here. There's a couple of them right here. If you're below the trend line and the background is red and the bars are red and you're stair stepping down, we are generally looking for shorts only. The exception to that would be in cases where the bars are yellow and in a tight consolidative range. Let me show you a couple examples of that. Here's a good one right here. Here's another one right here. I'll show a couple other ones too, so you get the idea. Here's one right here. And here's another one over here. So what's happening here, just so that we all get kind of on the same page as to what's physically happening in the market when you get these little consolidation patches where the bars go sideways and generally are yellow, is that when a market moves which thrusts, if it thrusts in a given direction, then we know that the sellers are in control when you're shorting the market, right? The sellers are in control, or the sell scripts. Most of us know that a vast majority of the trading that's done both in the stock market and in the futures and Forex are algorithms, scripts. It's the big banks and the institutions running programs, buy and sell programs and scripts. And so when the sell scripts take control, the market moves down. Sometimes you get some very sharp movements. Sometimes you get very rapid sort of movements. You get retracements. You get we'll look at some trending moves here a little bit later. And then when the buy programs kick in and the buyers are in control, well, then the market heads up, pushes higher until such time as the profit taking comes in, and then the market goes back to consolidating. So you can think of it this way: when you have a consolidative patch or region, if you will, it represents indecision. In other words, the buying pressure from the buy programs and the buyers in the market and the selling pressure from the sellers in the market are more or less equal, and nobody is in control, so the market goes sideways. And here's you get these little consolidation patches, and generally they're yellow, and you're going to find them located usually right around the trend line, trend guidance line, or in the case of platinum, that would be the mid-band. Yeah, Kathy, more or less. I mean, they're, if you put them, up next to each other, they are different. The way they calculate is very different. But they're as far as trading the markets is concerned, it's treated very much the same. Below, you're looking for shorts, and above, you're looking for longs. Now, if you want a very simple, because we like to keep things fairly simple, if you want a fairly simple, easy way to think about the market and the types of trades that you will take, I'm going to show it to you this way. When a market is trending, I'm going to show you consolidative trades first, and then we're going to look at a trending market and retracement trades, and you're going to see how different those two are. But those are the two basic types of trade. Consolidation, where you have a region, a retracement trades in a trend, and the third one, of course, is where we box in around a market open, like 602, 632, or around news at 702, right? Those are more or less sort of time trades, but they're treated much like consolidation because you're going to box an area in, right? Everybody's seen that, right? And so that's the basics. If you learn these two types of very simple, straightforward trades, you can do pretty well. You can put some pretty good coin in your pocket. Now, as far as the object trader here, as I said before, this is the older version. I just wanted to have the panel up here to show you what OT is, because for the purposes of tonight, we're just going to look at outside close trades. Outside close. We're going to keep it very simple. It's going to be region-based trades, which is essentially the box, and they're all going to be outside close. I'm not going to get into the intricacies of inside touch and all that sort of stuff. We'll save that for another webinar. So looking at these consolidative ranges, the first thing we do when we try to identify where the box is going to go, and I'm going to do a few of them, we're going to do a few together, and then as time goes by, I'm going to show you some, and then as a team, we're going to work together, and you're going to start to call out where to put the box and how to frame it in. Because what I want everybody to be able to do when we leave here tonight is tomorrow morning or tonight or whenever you trade, you're going to be able to spot these areas. You're going to see where to put the support and resistance top and bottom and be able to do it yourself. That's the goal of tonight. All right, so let's take a couple of them, straightforward ones, and take a look at this one right here. We'll start with this one. The first thing we do when we're looking at a consolidation range is you can take a line if this helps you. I sometimes do the line. And we want to fully engulf not only the body of the bars, but the wicks of the bars as well, like such. Now, there are a couple of things on this chart that are going to help you with that, okay? The one that's going to help you is you see these little dots. We have what's called swing high-low dashes, and we have trailing stop dots. And so many times what happens with these swing lines is that once an area is established, we're going to box it in and use that as the location for the top and bottom of our box. Okay? So pretty straightforward. Let's look at another box. Let's look at this one right here. We're going to do a few of them together. Let's look at this box right here. This is the second box I want to see. This one right here just before the market moved up. Now, I just want to point out something, that when you hit enter, and most of you, if you've traded with OT, Object Trader, you're going to know that when you hit enter, the hotkey, it pops up a little box that kind of looks like this. And it's going to be somewhat opaque, which means that it's not active. And the reason we do that is because you don't want to have an active box just pop up sort of close to and immediately start taking trades. That sort of defeats the purpose of having boxing in the region in the first place, right? So here again, what we do is we locate the top of the swing. We locate the bottom of the swing. In this case, the wick of these bars just under the trend guidance line here, and we simply drag the box up here. We drag the bottom down here. The activate key is our enter key, which is the hotkey on the keyboard, and it will turn a dark patch like that. See how easy that is? You can see them all over the place. Here's another one right here. We can see the top of it was here, and the bottom was located here. So what happens then once you activate the box and you've located it and you hit the enter key on an outside close? What that means is that when you get a candle or a bar that closes outside of the region, you will be filled long in this case or short below. Long above and short below. It's that straightforward. It's not any more complicated than that. Now, we do have other webinars, and by the way, they are on the web and in the subscriber area, that are dedicated to showing the details of how Object Trader works, how to set the targets, how many contracts to put on, how your stops should be set, the break-even trigger, all the different uses of it. If you've not had a chance to watch those, please go to the web and download them and watch them, because it gets in all the features of how this OT works. It's pretty straightforward, but you need to learn that. I'm not going to spend any time on that tonight. I'm going to assume that everybody knows that. We're focusing strictly on the consolidation areas. All right, so now you know the basics. Now we're going to try our first consolidation area together. And I'm going to start off with a couple of fairly easy ones, and then I'm going to make them more difficult, because here's the thing. You're going to notice that the size and position and location of each of these little consolidation boxes is almost always never the same. There's always subtle variations in how they work and how they pan out in terms of the trade. So we're going to look at a full gamut of them. And I'm going to start with this one. All right, here we go. And I'm going to give you each one of these consolidation patches, I'm going to give you 60 seconds. And everybody in here, if you can, participate. The way this is going to work is I'm going to show you a consolidation area, and you're going to call out the top and the bottom of where the box should be positioned. And here's the first one right now. Just type in. You don't have to type the 1100 part of it. We all know it's 11. It would, your number would be something like, I'll just throw a number out there, 6450 to 6520. So we're looking for two numbers, top and bottom of the box. 60 seconds on the clock. Just two numbers. So if you had a chart in front of you on your desktop that looked like this, and you were going to use OT to box it in, where would the top of the box be positioned and the bottom? Jack, what we're doing is I'm showing you consolidation areas, and we're going to practice together as a team, seeing where the top of the consolidation box will be drawn and the bottom. So you just need to type in two numbers. 30 more seconds. Now this is a pretty easy one, so you shouldn't be too tough to see the top and bottom of where that box wants to be positioned. 20 seconds left. Just need a number for the top, number for the bottom. And we'll see how many of you can get this one correct. This is the first one we're doing together. Hey Chris, good to see you. Good to see you can make it. All right, 10 seconds left to get your numbers in. The two numbers. I'll know. You don't have to put top and bottom too, by the way, if you want to save some time. We will know that the lower number is the bottom of the box, and of course the higher number would be the larger number. So just two numbers. All right, time's almost up. 5 seconds. Where's the top and bottom of the box for you to engulf this yellow consolidation area on the Russell? 2 seconds left. All right, good. Time is up. Now, don't worry. If this is your first time doing it, don't sweat it out. Some of you might just be seeing some of this for the first time. We're doing these exercises together so that when you're faced with this, even if you're trading in sim, so I just want to be clear on that, is, you know, it's extremely valuable to create in sim how you're going to trade a market live. Because eventually that's the whole reason why you do it, right? You trade in sim so eventually you can put some fund a trading account, you know, connect to your trading account, and then you're going to start making some live money, but you got to practice first. Okay, so let's see what numbers came in here. Chris said 69, 69.50, 69.60. Okay, good. And then we got Roger in here. Michael came in, Charles D, Hardy, Dennis, 69.50, a lot of 69.50, 60.60s. Hey Joe, Kathy C, thank you. Ron, looks good. Same numbers. Mary, Thomas P. Hey Jack, some good numbers there. Rob, Thomas, and Joe weighed in. Excellent. Yeah, you know, I'll show a couple, Jack, where the consolidation is not yellow. Generally speaking, as I said, and I'll while we're getting ready to do this, I want to point a couple of things out before we give the actual final numbers. Consolidation patches will generally look something like this. Here's another one here. When you get good at spotting them, when you really work at this and you work at spotting them as they're setting up in real time, they will become a lot more clear to you. They're generally going to be hovering right around the trend guidance line for pro users, and this, of course, is the mid-band if you're a platinum user. And the bars tend to be yellow, which represents indecision, so there's no direction in the market when they set up like this. However, as you can see, this one is not located on the line itself. It's slightly below it. So when you're looking to box it in, when you're, like I said, when you hit the enter key or insert key, and the object trader puts the box up initially like this, it's going to look something like that, and it's going to be located right where the candle is that you, whenever you strike the insert key, it will put a little small box, opaque, and located, so we all know that this is not what you're going to trade. So I'm going to blow this up and let's get real in detail and clear about what's happening here. Okay, I'm going to expand this out. Now, there's the bottom of this box is very clear in my view, in the fact that you see some swing high-low lines right at 68.60. So if you said the bottom of the box was located here, you were right on the money, and that was pretty clear. With respect to the top of the box, you have two choices, and both of them are good. Let me explain. Before I draw it, here's our box. It's ready to be positioned. It's just sitting there right now, okay? If you said that the top of the consolidation was located here, roughly at 69.30 or 69.40 or even 69.50, more or less right in here, which engulfs the candles and the wicks inside the consolidative area, that was a good answer, a very good answer, and a tight box. Okay, that would be a very tight consolidation box. However, if you made note of the fact that there was a swing level just above there, located right up near the guidance line, right there, call it 69.60 or even close to 69.70, just above 69.50, and your box would be there, that's perfectly acceptable. Okay, perfectly acceptable. So two good answers would be a box that would look like this. Secondary answer would have the same bottom, located here, and the top would be just a couple of 3 ticks higher up into that area right there. Both of those answers were good if you had those levels. Now back over here, okay, when you have these consolidative patches and it represents indecision, so essentially what you're saying is, I don't know what direction this market could go. So what we're going to do is we're going to activate the long side. We're going to activate the short side, which is S enabled, and you can turn reversal off if you want. Reversal is simply it reverses when it comes back through it. You don't have to leave that on, you know, if you just want to take a one-directional trade. And in this condition right here, when you get a close above here, it will fill you long. It will put a buy into the market, and it will put in all the targets and stops that you have set right in here automatically. That's why this is kind of a semi-automated strategy. There is some discretionary, little bit of work you do with positioning the box, but once you turn it on, which is the enter key, it turns a dark color like this. And now you know it's active. Likewise, if you enable the short side, a close below this level of 68.60 will get you short. It will sell the market, put all the short targets in, put all the stops in, and manage the trade in an automated fashion for you. That's the beauty of this tool, and that's why it was created that way. We found that these areas used to really confound traders because they would look at these patches and say, well, I don't know what to do with that thing. I know it's going to go somewhere, but I don't know, how do I box this in, and how do I let it take the trades? And OT solved that problem. All right, good. Everybody did great. Good, perfect. All right, let's move on. Let's see what happened here. We chop around. We're consolidating. We're still consolidating. We're consolidating. Uh-oh, what happened right here? What happened right there? Got 1, 2, 3 candles below the bottom of your box, both boxes, by the way, which had the bottom was exactly the same on both boxes. You got filled short. That's right. We got filled short. And so we start to drop. We retrace a little bit. We start to drop. We retrace a little bit. And then depending on the targets you had here, 5, 10, 15, 20 ticks. If you got filled at 69, 40, 30 maybe, somewhere in here, less 20 ticks would be 66, 50, 20 ticks would be down in here. You would have hit all your targets. 68, yeah, 60, somewhere down in here would be your 20 ticks. Right here. So you got filled short. 5, 10, 15, 20 ticks, and it kept dropping. Yeah, it took the short. It took the short break, Hardy and Joe K. Why do you use a tick chart versus a time chart? Thomas, just real quick, that's a good question. I'll tell you, many years ago, many years ago, I've been trading a little over 20 years, and Viper's been around for about 7. Back in the beginning when we started the room and we're in the early stages of Viper, we had a combination of different types of time-based charts. We would take trend direction from like a 30 or 60 minute, depending on the volatility of the market, we would trade anywhere from like a 3 to a 5 minute. We'd take interim guidance from like a 10 or a 15 for, like swing levels and stuff like that. And so what we found was that when when you get all those together, you had your 60 over here and your 15 here with the swings, and you're trying to trade the 3, and you're looking at all these charts all together, and it just, the other problem is this, is that when you look at a time-based chart, unlike other types of charts like range-based or any type of Renko bar, there's many types of Renko bars out there, that the size of the bar varies. So in other words, let's do a series of sort of simulated minute bars here. All right, one bar might look like that. Another bar would look like this, a little bit shorter. And then you have another one that's kind of, over here like this. And they're all kind of randomly dispersed around some area. And then another one kind of shoots up like that. And so essentially what you're doing when you have a time-based bar chart is you're artificially constraining the price action and movement of the instrument to the time that you have chosen, be it 1 minute, 3 minute, 5 minute. And by virtue of that artificial restriction, the bars are going to be of various sizes and not of good use, in our opinion. When you go to a uniform bar size, which is we like the 4 range, and we use that for consistency in terms of what we teach and show in the room, is a 4 range chart, meaning each bar is 4 ticks. Okay? Is that it creates some uniformity and is much easier to see a trend and see these consolidation patches and actually trade when the market moves. So that's why we did that. Now, you can set your charts up exactly like we show you. You can set them up like in the room. You can put other types of indicators on there. You can set it up like this, however you want to do it. And you can use other types of, you can use a Renko bar if you like it. You can change the range bar size. If you want a larger bar, you can go with a 5 or a 6 or even an 8. Now, a word of caution. If you go to a larger bar size, what's going to happen is that some of these areas like this, say an area like that, you're going to get much more smoothing in the fact that you're going to have half as many bars. So a big area like this that has all these bars is going to have half this many bars. So it's going to be a little more clear, and you're going to find areas like this where it's kind of chopping around. When you put a larger bar like a 6 or an 8, or even down here, you're just getting, instead of having all these 4-range bars down here, you can try it when you have a chart. Put a 6 or an 8 up. It's going to reduce the number of bars, and this area is going to be much smoother. Now the downside of that is when you trade a larger bar, your stops are much larger, because what's going to happen is the size of your bar is going to drive your stop. So your stop might be as much as 30 to 40, 50% larger on a larger bar. If you don't mind a bigger stop, then by all means do it. All right, good. Everybody did perfect. Any questions on that trade? Let's move on and look at a couple more. I'm going to look at least one more Russell, and then we'll pop a crude oil up, okay? Okay, here comes another one. I'm going to make these a little bit tougher. The next few boxes are not going to be easy, because that's the way the market works, right? Let me do a tougher one. I see a couple of easy ones. I'm going to do a tougher one right here. Okay, you ready? This one's a little tougher. All right, here we go. Here's the next trade. Next consolidative range trade setup, where as a team collectively we are going to call out. You get 60 seconds to locate the top of your region or box, and just type in the number for the bottom and the top. 60 seconds. Like I said, you don't have to actually say top or bottom. We will know that the lower number is obviously the bottom of the box, and the larger number will be the top. 2 numbers, top and bottom of our trading region, our consolidative region. Making this one just slightly tougher. And then the next one's going to be a little tougher. And then before we get to the end of the evening here, I'm going to give you a couple of really tough ones, because those come along once in a while, and you got to be ready to deal with them. They're not always going to be perfect, but when you learn to see them. 30 more seconds. Top and bottom of the box. If you were faced with this condition on your chart, where would you put the object trader region? I went to Starbucks and I ordered some. I usually get tea, either green or black tea. For some reason, they gave me an iced coffee. Excuse me. Funny thing was, I took a sip of it, and I thought it was tea, and they got this really distinct dark coffee flavor, and I'm like, wow, and it's actually pretty good, so I kept it. All right, we got 15 seconds left. Top and bottom of the box. Where are we going to draw our region to take this trade? Top and bottom. ¿Dónde está? 10 seconds left. Let's look at the chart. Our eyes are focused on the right-hand side, the right edge, right here. Time's almost up. Try to get your numbers in. Hey, Daryl, let me answer that question, and then we'll get to all the numbers. He's asking what drives the color of the bars. There are in the Viper scripts, in the Pro package, there are algorithms that are analyzing the price action of the market, and based on what the market is doing, it's giving you the background colors, the bar colors, this what we call the stealth line, which sort of hugs the price. It's either red or green, and that's how those are created. Yeah, so it's Viper indicator scripts. All right, time is up. Let's see. Daryl A. Odin, 6410, 6280 bottom. Okay, good. Michael P. Got some good numbers. Hardy, Mary C. Those look good. Dennis A. Good to see you there. Rob's got some good numbers. Charles D. got it. Hey, Roger. That looks pretty good. Walter P. Ron S. weighing in. Kathy C. Those look pretty good too. Chris. We got Paul coming in here and nailing a couple good numbers, Thomas P. and Joe K. Excellent. All right, here again, you're going to find usually at least one part of the box, either the top or the bottom, sometimes are just, crystal clear. In this case, it would be the top of the box because we have a pretty well-defined swing right here where we have the swing high-low dots. So that's really extremely helpful because if you said the top of the box was there, you were absolutely correct. Where the bottom of the box becomes a little more challenging is in the fact that, you've got kind of a swing down here, you've got another swing kind of here, and then you've got a swing that's established just under 63. So if you're going to engulf the wick and body of this candle, the bottom, in my view, would be right under here. So if you said anywhere around the 62, 70 to 62, 80 or 90, anywhere sort of in this area right here, you were right on the bottom. Okay, so our box would look something like this. When we finish drawing it and engulfing the consolidative region, and we hit our enter hotkey, turns the darker color, and now we're active. So we know with an outside close that close above here would get us short. Close above here would get us long, and a close below here would get us short. Now, a word of caution, and we'll get into this. I'll reserve this part of the discussion for part 2 on Saturday morning. I want you to make note of this, and when you're drawing these boxes and taking these trades, here's something to be aware of. There is a swing. You can see a couple of swings in the market located just below the bottom of the box in this area right here. Now, what can happen with some of the what we call head fakes sometimes is that a market could very quickly pop down into this area here, find support like that, and then quickly pop right back into your box. That happens not all the time, but frequently. The way you combat this is through use of the break-even trigger. And here's how you do that. Just very quickly. I'll get into more detail on Saturday about it. Okay, the bottom of the box is right here around 62.70, and this area is located at 61.90. So this is about 6, 7, 8 ticks, roughly. Yeah, about 8 ticks. All right. So if you get a pop and you don't want to get head faked in and then wind up with a loss, go ahead and set your break-even trigger to 6. Now, what this will do is it will take your initial stop of 12 ticks on your trade, which will be up here somewhere. All right, when it fires and you have all these contracts on, your initial stop is going to be up here, 12 ticks above your entry if it took the short, right? And after it moves 6 ticks, which would be this pop right here, it will go ahead and take your trailing or your initial stop down to right break even with where you got in. This is also a function of the instrument you like to trade. Crude oil and gold and the Russell are notorious for popping through regions and then coming right back into them. And so you're going to have to kind of weigh out this trigger. Now, the problem if you make it too tight is that, if you set this to like 2 ticks and then and then it bounces down here and then it comes up and hits resistance, it could stop you out and you miss a really nice trade. Dennis, his question is this: how many bars should plot on the chart before you consider forming a box? I don't know that it's really a function of how many bars. I generally look for. Let me show a couple other ones while we're getting ready to finish this one. Here's a good cluster right here. Generally, they're going to be yellow. They're going to be oscillating right around the trend line or the mid band. Here's another one right here. Sometimes it takes a couple of 5 minutes. Sometimes it can sit there for 10 minutes. Sometimes it can form very quickly. Here's a little cluster right here. See them? You'll see them all over the place. Once you learn these and you start looking at the chart, you're like, why didn't I see these little regions before? Why didn't I see these? And then you're going to see them all over the place, and then it's going to be so easy because you're going to just draw it in and take the trade. Yeah, so anyway, so let's advance this. Okay, we can see up here that depending on where your box was located, you got filled on that bar right there. And by the way, this is the type of price action we look for when a market makes a move in a given direction. We look for what we call a thrust in the trend direction. This case was up. We look for a retracement to a higher level of support, in this case right here. We look for a follow-on thrust back up. We look for a retracement back down into support, which you get right here. Now, here's a bonus question. There is another trade setting up on this chart right now. What is it? Bonus question. And you seasoned folks in here that are with us, you should know this right off the top of your head. If you're new, you can take a hall pass because you might not know what it is. That's cool. But if you've been with us for a while, this should be very clear to you what this is. What is this? What just happened right here? It's happening right now on this chart. If you had the OT box on there, you're already long. But let's suppose you're not long. Let's suppose you missed that OT trade. What's happening right here? Retracement into support. This is a first time retracement after a trend change up. Good. It could be a mid-band. Yeah. Well, this isn't exactly the mid-band. It's a guidance line on Pro, but it's very similar in how you trade it. Now, there's a couple of tools on how you can approach this. The first one is to make use of our money shade line, which looks like this. You draw a retracement line like that, and you hit buy. Now, by the way, just a heads up, you can't use the money shade tools on the same chart as OT. They're mutually exclusive. So if you're going to trade OT as an entry technique, you have to just use the OT. In this case, you would box in this little consolidative area with these bars right here. This is your second box. Activate it and let it take the trade either way. Okay, see the little 3, 4 bars right there? A couple of 3 bars, see them? That's if you have OT on there. If you don't, and I like to use the right-hand side tools because they're close-based. Here we get a close. If you had the money shade tool drawn, you would be filled probably on that bar right there, long. And then we pop up, we take the swing, we pull back. Each of these pullbacks, we're going up to higher highs. And so there was your trade. Good. Rob got that. Walter, Hardy, Mary C., Thomas, everybody, Hardy, and Charles got it. Same with Roger. Good. Retracement into support. Retracement trade after a trend change up. Perfect. Good. All right, let's do this. I'm going to change to, I know we're going to run out of time here, a couple of 5 minutes. Let's put crude oil up here and look at a couple crude oil trades. By the way, just some feedback from the team. You guys like what you're seeing here? You like those setups? Tell you what, tomorrow, tonight, whenever you trade, pop your charts up and look for those. You're going to be amazed. They're going to pop up. You're going to see it. You're going to see those yellow bars. They're going to be kind of around where you're looking, transitioning long or short. You're going to say, wow, look how easy this is. I just pull up my deal, box it in, and off we go. I love that. Okay, good. Excellent. All right. Let's do a tougher one here on crude. Let me see if I can find a little bit tougher one for you so it's not so easy to see. Let's see. I think I got one right here. Okay, you ready? Here's crude oil. "60 seconds on the clock. Consolidative range. We need the top and bottom of the box. 60 seconds on the clock." Yeah, let me offer a suggestion on that. Joe K weighing in here. He said today's price action right at the open was very wild. The fast-moving swings cost and hit my stops. And I've said this in other webinars, and some of you may or may not have heard it. Here's the deal. Sometimes trading the opening of markets is not a good idea because today, for instance, we were in just this huge, not huge, but very large range where, the range was, I think, 30 ticks on almost each instrument, and the Band-Aid was almost kind of right in the middle of it, right? And you know, you had to really kind of see the broader picture of where support and resistance were, because it wasn't a trending move. Most people are typing it in. You got 35 seconds left. A trending move is where you have something like this. And what I'm suggesting, Joe K., and for other ones who get whipped around in market opens, you know, if you see a large range and you're not good at trading ranges, here's a good example right here. See that big, huge range there? 78 to 78.25, 25-tick consolidation range, sort of swimming above and below here. All right, if you're not good at that, you have to wait till a trend sets up and then buy or sell the retracements into support or resistance. Remember the other type of trades we said we have? We have thrust. In a downtrend, we are shorting resistance, so you'd be shorting that move right there. Now in the room, you might hear something like 77.90 should hold as resistance. Put your stops above there and look for a rollover for a potential short entry. What that means is this, is that whoever is saying it, if it was me, is I'm saying I see a swing level here right like that. And on a retracement, after a thrust down, when the market pulls back up into this area right here and rolls over, that you should look to take a short, because essentially what I'm saying is I'm saying the trend is down. We're looking for shorts on a retracement to resistance. Everybody see that? Everybody understand what that means? So you don't want to get, you know, generally speaking, you don't want to get into markets after the thrust part of the move has occurred. Because after a thrust occurs, is you get profit taking on all the shorts who got in way up here are now taking profits, and they're pushing the market back up. That's why it does that. Shorties are pushing it down. Shorties are pushing it down. Some profit taking pushes it back up. Short covering, right? Push it down, push it down, push it down. Profit taking pushes it back up. All the way until you get a consolidation area that starts to form something like this. Now we have indecision. Bulls and bears are fighting and trying to decide which way the market's ultimately going to wind up going. All right, time is up on our box. Everybody in? Time is up. Okay, let's see what we got here. Joe K weighing in. Those numbers look good. Walter, Joe, Hardy, Daryl, Rob J. Those numbers look pretty good. Charles D. Michael P. Mary C. Those numbers look pretty good too. Kathy C. Dennis A. I like it. And Roger. All good numbers. All good numbers. All right, good. All right, so here again, we got some clues to help us. We got our swing high-low lines right here. Now you got to be careful. You got a little wick of body of a candle that closed at the top of its candle formation. Let me be more specific about what I'm talking about, so we're all clear. When candles are forming, there is a lot going on inside of each candle, okay? Let's just have a quick discussion about what that is, okay? Can you see these candles right here? And there's a book, I've read all the books written, well, not all of them, but all Steve Neeson's books that teach what these bars are and what's going on internally inside of the bar. When you have a candle that has a very long wick and a small body located by the top of the candle itself, what's actually happening inside of the bar is that you're getting buying pressure that's supporting the bottom of the support area and pushing it up. That's what that is. When you have a bar that has a very long wick and a body closing at or near the bottom of its candle body, what that is telling you is that internally within the bar there is pressure, there's selling pressure to take the bar back down. That's why those bars look like that. Okay? Now, contrast that with a bar that looks like this. In this case, the bar closed at the absolute top of the bar. Now I'm going to tell you now why that is important. If you had drawn your box with the top of it located like such, then the very tip top of that candle would fill you long. And you don't want that, okay? Because the way this is with the outside close means close of a bar. And it could be by one tick as the bar closes at its top. That's why you engulf the wicks of bars. Because if you drew it like this down here, and these little candles that went down and the wicks didn't close, so you say, woo, I avoided getting short there. It was only a wick, it didn't close. Well, if you had another bar that closed down below it like that, oops, it would fill you short. So if you said that you're going to engulf this area here at 73 as the top, you were correct. I think every single person got that. And if you said the bottom is down at 54, anywhere down in here to engulf the box, you were correct. We hit our enter hotkey, makes the thing dark, we know it's live, and we're going to take a short or a long because we don't know what direction it's going to go. Outside close. Have everything all set up ahead of time, how many contracts we want, all of it's ready to go. All right, we're chopping around, we're chopping around, we're chopping around, we're still inside the box. The box is active, it's continuing on. Yeah, I just usually accept the default, which is 30 minutes. That means that as the market plays out and chops sideways, the box extends itself. Here we get filled long on this bar right here. Coming outside the box, you're long on the close of that bar right there. Pops up, pops up, pops up. Finds resistance at 77.99. You would have been filled long somewhere around 77.76, kind of right in here. And it went all the way up to 98. So what's that, about 21 ticks? So if you had 2 or 3 targets on and the top one was 15 or 20 ticks, it would have filled all 4 targets. Good. Everybody got that right. You can move the top and bottom of the box, Kathy C, but you have to deactivate it to move it. You can't move it once it's been activated. Once you hit the enter key and it's darker shade and you know it's live, you have to hit enter again, reposition the box to where you want it, wherever that is, if you decide you want to kind of adjust it a little bit, and then hit enter again, and then it will turn dark shade, and then it's live again, okay? The stealth line, Hardy, that's a good point here. Kind of gave you a heads up that the break was probably going to be up. He made note of the fact that there was a green stealth line here, and you were coming up one more time to the swing, and then poke through it, pull back just slightly, and then broke up. Now this took a little while. I mean, back to the earlier question of how many bars and how long does it take for this to happen. The beginning of this consolidation patch arguably started over in here, 11:10, something like that, and it ended all the way over here at 11:23. So what is that? 13 minutes, 12, 13 minutes. Now they don't all last that long. Some are a couple of 5 minutes or 10 minutes. But the point I'm trying to make is that usually there's a little bit of time to watch what's going on here, and you don't have to feel rushed and panicked to position your box. Most times there's a little bit of time. Now, if you're going to hear in the room, you might hear comments like this. I would box that region in. See how it's going sideways around the midband, or it's going sideways around 65 to 70. Go ahead and box that in. Essentially, what that's saying is there's a consolidation patch here. You should box it in and then let Object Trader take the trade. That's what that comment means. All right, good. Okay, well, I'm going to stop the recorder.